is a model that would come down and probably get close, touch this trend line, might even slightly dip below it. And then we would rally, dip, rally, go through a larger correction, and then rally higher off the charts here. So probably do something like this. This one would probably come a little bit deeper. Probably come down here maybe 2,600, 2,500, somewhere around there. And then it would start to rally higher. It would start to rally higher in something that looks like this. And then that one would kind of go up off the charts as well. And then we would get another larger correction. And the wave 4 triangle would have a deeper cut, and it would come, you know, maybe even slightly lower than what we're looking at now, rally a little bit, and then come down here. So this would drag on sideways, and then we would get a massive rally to the upside. So from here, we are unloading a correction lower that you've been feeling for the last couple of days. This correction lower, I believe, is incomplete. Now we may get a little bit of a rally, but I do think that we're going to see some further downside here in Ethereum. I think it's important that we keep in mind this longer term trend line. Going back to the pandemic low of March 2020, Ethereum has been holding up above this support trend line. So in essence, what this is saying is that regardless of whatever corrections we may experience into the future, as long as we're holding above this trend line, the mood of the market can be, is to the upside, and the mood of the market may allow us to expect further gains. Hi there everyone, this is Jeremy with See the Waves, and I want to welcome you to this video on Ethereum. We're going to take a look at the price chart for Ethereum and specifically using Elliott Wave Theory, identify where we may be at within the trend and how far the trend may extend, basically what the next move may be. So before we dig into it, there are going to be three main Elliott Wave models that I'm going to share with you. Now, before we get into those three models, I think it's important that we keep in mind this longer term trend line. Going back to the pandemic low of March 2020, Ethereum has been holding up above this support trend line. So in essence, what this is saying is that regardless of whatever corrections we may experience into the future, as long as we're holding above this trend line, the mood of the market can be is to the upside, and the mood of the market may allow us to expect further gains. So if we zoom in on this chart, this trend line is crossing about near 3,500 or so. And so it's moving up. So with every day that clocks by, this trend line is going to be moving higher and higher. We are above that right now. We're sitting near 4,200. So if you were just using classical technical analysis and looking at this trend line, you could comfortably assume that we are in an uptrend. And if price were to come down and reach this trend line, this would be a heck of a buying opportunity to buy into this trend to the upside. So with that, there are three models that I'm going to be looking at here. And just so we can keep these organized, these are in no particular order. Well, I tell you what, let me put them in an order that I feel like they may happen. So I'm going to go in reverse order. So the one that of the three models that I'm going to talk about, the one that I think is least likely to occur is that we are in a wave 4 triangle. And then the second one, I'm going to call this one an let's call it aggressive impulse wave. And I'm labeling it as an aggressive impulse wave simply because it would imply there's a lot more upside available. And then the one that is the most likely is the one that we'll call the conservative impulse wave. Okay, so what I want to do is I want to start off with, gosh, I kind of did these in the opposite order. The conservative is the one that I think is the higher probability, so let me include this. Higher probability, and then we'll just call these lower probability. So what I would like to do is start off just from a big picture perspective and map out what each of these models look like. And I want to start off with that conservative model. And then from that conservative model, we'll take a look at the aggressive impulse model. And then we'll take a peek here at the wave for triangle. So first, starting off with the conservative impulse wave, basically what this implies is a model. I'm going to need a little more upside here. Is a model that would come down and probably get close, touch this trend line, might even slightly dip below it. And then we would rally, dip, rally, go through a larger correction, and then rally higher off the charts here. So probably do something like this. So this is what I would consider to be a conservative impulse wave higher. That we're looking at something like this. Let me make sure I get the waves correct. Yeah, yep. So it would be something like this. And then from here, we would get a much more significant pullback taking place. So basically we would be looking at something, probably back down, about to where we are now. So the good news with this model is that we're looking at multiples higher. Once we get those multiples higher, then a significant correction may unfold. And so if we were just to look at 20,000 down to 3,000, that would be an 85% correction, which is about typical of what we've seen within the cryptocurrency sphere every few years. So that's the one model. Another model, the more aggressive impulse wave model, would look like this. And it would start, okay, let me think here for a minute. This one would probably come a little bit deeper. Probably come down here maybe 2,600, 2,500, somewhere around there. And then it would start to rally higher. It would start to rally higher in something that looks like this. And then that one would kind of go up off the charts as well. And then we would get another larger correction. So as you can see, there is some similarity between, what happened to my RSI there? There we go. There is some similarity between the number 3 and number 2. I don't have it displayed here on the chart, but number 2 would be much more aggressive to the upside. Let's change the color of that as well. Let's change the color of that one to, we'll just kind of give it a blackish color. And then the other lower probability model is that we're looking at a wave for triangle. And the wave for triangle would have a deeper cut, and it would come, maybe even slightly lower than what we're looking at now, rally a little bit, and then come down here. So this would drag on sideways, and then we would get a massive rally to the upside. And we'll give that one a red paint color to it. So here are basically the 3 models that we're looking at. And all 3 of these models, minimally, I think there's going to be a little more correction to come. And we'll get into some specific levels here in just a moment. So a little bit more correction to come. Keep an eye on this support trend line. If we break this support trend line, that doesn't mean that the upside is completely out of the picture. It just means that it's likely going to be delayed. And the higher probability count that I'm looking at, this conservative impulse wave, I think we're going to hold up above this trend line. So let's get those out of the way here, these paths. And I'll leave this over here. So this is what it looks like going in order of preference. So the first wave, or I guess the first path that we're looking at is something like this. So we've got a intermediate wave 2 lower here. This has led to a minor wave 1 higher, minor wave 2 correction over the summer, and that we are going to be rallying higher in a minor wave 3. Now, within this minor wave 3, it's going to need to subdivide as an impulse wave, so a 5-wave impulse wave. So in order, we'll know when minor wave 3 is complete when we get a completed impulse wave to the upside. So when we come out here and we take a look, okay, so where is my link for minor wave 3? We are looking at something like this. Let me zoom in just a smidge here. Okay. So minor wave 3 is going to need to unload as a 5-wave impulse, and this would suggest that we've got wave 1 in place here to the September high, wave 2 in place to the September low, and we have not completed wave 3 yet. So we are still very early within this larger wave 3 trend to the upside. As a matter of fact, if we come out here, we can see that we got a real nice 3-wave correction here into this wave 2 low. And then from there, we've got another, wave 1. This will lead to wave 2 lower, wave 3, 4, 5 to finish up wave 3, and then wave 4, and then wave 5, and then that will finish up minor wave 3. So there is still a lot of unpacking and unloading to the upside under this model. And I do have this one called the conservative one, as we'll see in a minute. Now let's zoom in. Let's take a look here at a 4-hour chart and inspect this particular wave count a little bit closer. Okay, so what we've got here to the left, we've got a real nice impulse wave, triangle 4. This triangle 4 is alternates with what we saw within wave 2, and there is a guideline of alternation, so it fits very nicely here within the Elliott Wave Theory as a completed impulse wave up into that September high. From that September high, we saw a correction down into that September low, and then from that low in September, we are starting to unpack a series of impulse waves to the upside. And so here we've got a wave 1, then a wave 2 correction, followed by a wave 3. Now this wave 3 ended up being 2618, the length of wave 1. And so that's a very common wave relationship for wave 3 within an impulse wave relative to wave 1. So we've got a 2618 relationship, and we can even count a 5-wave impulse wave within this third wave. And then from there, we've got a 3-wave correction in wave 4. And then from there, prices have ground higher. And I'm looking at this. It's not the cleanest, but I am looking at this as an ending diagonal pattern. Okay. Within the ending diagonal pattern, you're looking at ABC, wave 2, and then ABC, wave 3, and then 4 and 5. So this ending diagonal pattern is a big clue as to what we can expect further. One other thing to note here, came very close to the maximum level that this ending diagonal could push to. So it's very tight. It's not the cleanest. We've got a real clean 3-wave move here, but waves 3 and wave 5 were not the cleanest 3 waves move, at least on the smaller time frame charts. So from here, we are unloading a correction lower that you've been feeling for the last couple of days. This correction lower, I believe, is incomplete. Now, we may get a little bit of a rally, but I do think that we're going to see some further downside here in Ethereum. The rally does not have to take place, but the further downside, I do believe, is higher probability. And that's because within an ending diagonal pattern, a lot of times you're going to get a swift retracement back to the previous, or back to the origination of the ending diagonal pattern. So this ending diagonal pattern began right here on October the 27th at that low. That low is just below 3,900. So with Ethereum sitting at 4,200, the probability of getting a retracement down to 3,900, I would consider it to be fairly high. And if we do get that retracement down to 3,900, that is still going to place us well above this this trend line here. Okay. Now, some of it may depend on how long it takes to get there. If it takes, to the end of November, well, then that's where the trend line is going to come up and meet us at that target. But 3,900, I believe, is an area where if you're looking to position or add more fuel to your Ethereum position, I would consider waiting until we get down below 3,900. If you like what you see here, go ahead, press the like button, hit the subscribe button, and turn on all notifications. That way you'll be notified of future videos. Another way that we can look at how deep this might go, I would consider 3,900 to be a minimum retracement level. Now, we have a completed impulse wave from the September low up here to this November high. So if we simply draw a Fibonacci retracement level from that low up to the high, notice we get a 38% retracement coming in right at that previous fourth wave. So this is a clue and indication that there is some harmony and geometry taking place within the waves of this impulse, and that prices do not have to come down to the 38% retracement level, but the fact that that's where the previous fourth wave is, that's where the origination of the ending diagonal is, that is a higher probability target. From there, it is possible that maybe we could see Ethereum work itself down to the 61% retracement level. That 61% retracement level is also a previous fourth wave at lesser degree. So we're beginning to build this zone of where a retracement may dig into, and that's basically between 3,300 and 3,900. Between 3,300 and 3,900 is going to be a higher probability zone of which to accumulate some Ethereum. Now, this is all based on this wave model that we're looking at right now. And as I shared with you at the beginning of the video, there are two other wave models, which I consider to be lower probability, but they're still possible. We need to keep an eye on them. They have the potential for deeper cuts coming below the 3,300. But with this being the higher probability wave picture that I'm looking at, 3,300 to 3,900, I think, is going to be a really good accumulation zone for Ethereum. Now, for this wave model to stay valid, it will need to hold up above this September low, which is down here near 26. So it could dig a little bit deeper down here as well. But I believe that a significantly deeper cut below 3,300, I believe that below 3,300 becomes lower probability. And the reason being is, let me get some of these labels off the chart. Let me clean this up here for just a moment. Okay, and let's go back to the daily chart. Okay, so the reason, or one reason why I believe that below 3,300 is lower probability is because we would be looking at this as being wave 1, this is a wave 2, this is a smaller degree wave 1, and this is a smaller degree wave 2, okay? Now, since this correction lower would be smaller degree of trend, then it should also be smaller in size relative to the size of this one. So one thing that we can do is we can come out here, we can actually measure the depth of this correction wave. And this corrective wave 2 here was 34%. Off of the high, it was 34% lower. So if we come over here and we can see, well, how far would 34% take us? Now, 34% would take us down here to about 3150 or so, just below 3200. Now, like I said, generally when you get an extended third wave higher like what we're looking at right now, where we get a smaller degree wave 2, this smaller degree wave 2 should be smaller than the previous larger degree wave 2. So therefore, we could argue that this would need to be less than 34%. And as a matter of fact, down to that 3,300 that we were talking about a little bit ago, that 3,300 is a 31% correction. So just another piece of evidence that makes me think we are looking at Ethereum correcting lower to 3,300 to 3,900. From there, it's going to find its footing, and then we should see Ethereum really take off to the upside, and we're going to see it unload that really quick as our corrections would be getting smaller and smaller. Now, it's quite possible that it could hold up above this trend line. This trend line's coming in around that 35, 36, 3,700 area. So that trend line may be the catalyst that supports Ethereum prices and helps propel it higher. All right, so that's the main count. Let me clean up, do a little gardening here. And let's talk briefly about the other options. Okay, so the other option, if we look back here, so we're talking about that conservative impulse wave higher. That conservative, by the way, that conservative impulse wave higher, we would be looking at something like, so if we come down here and if we just measure the length of wave 1 here, and if we just simply look for a 1618 relationship, 1618 would carry us up to just about 11,000. Okay, so at 11,000, this wave to the upside is not over, but I believe it's around that 11,000 mark where we would begin to see some larger corrective waves take hold. Some larger corrective waves that would be similar in size to this 34% correction. So once we get up to 11,000, I think that's where we may start to see like 35, maybe 50% corrections beginning to unfold. But until then, obviously a lot of upside is available. So let's take a look here. These other wave counts real briefly. The first alternative is going to be this aggressive impulse wave. I consider this one to be lower probability. It does have somewhat of a similar look to somewhat similar look as to the one that I just shared with you, and it's going to look like this. Basically, instead of wave 1 finishing right here, we're looking at wave 1 finishing just a couple of days ago. And with that, that means that we would be going through a wave 2 correction that would likely be a little bit deeper than the previous wave 2 correction because they would be at different degrees of trend. And we would be looking at the largest correction since Ethereum began its rally in June of 2021. So that would be what we would be looking at here under this one. Now, I call it more aggressive because when wave 1 is over here, then that means we are more advanced. The higher probability count was more advanced. Now that under this wave count, wave 1 is sitting right here, that means that this wave count is behind the previous one. And because it would be behind, it would have more and greater upside potential available. So instead of that 11,000 figure that we were talking about, we could be looking at, and I don't know where wave 2 is going to terminate yet, so let me just pick on a number here around 2,900 and say that's where it may terminate. Well, that could carry us up into the 15 to 16,000 range, okay? So that's why I call it more aggressive, just because it would have a higher potential available in it. But so where might this wave 2 land? If we're going through a wave 2 correction right now, where might this land? And one way that we can figure that out is by throwing a Fibonacci retracement level from this low up here to the high, and looking at that 38 to 78% retracement level. And because this would be a wave 2, that would be corresponding or smaller degree than this wave 2 over here. Okay, so we got a wave 2 here. This would be another wave 2. This would be smaller, okay? And then this would be the larger wave 2. So we would look for this wave 2 to be smaller in size than what we saw back here. So this guy over here was a 60% correction. And so if we come over here, if we take a look, if we come down to the 61% retracement level, that's about a 45% correction. If we come down here to the 78% retracement level, that's a 55% correction. So I think any of these are viable targets within this more aggressive plan. We're looking at a target that looks somewhere around here. So you're looking at about 2,100 to 3,200 would be that accumulation zone. So previously, on the first wave count we're looking at, it was 3,300 to 3,900. So if we bust below 3,300, then we begin to shift the probabilities and consider these other alternates as becoming higher probability, because this one could run down to 2,100 to 3,200. Okay, so let's clean this up. And let's take a look at the third option. So if we recall, if we come back here, the third option was this wave 4 triangle. And I consider this one to be lower probability as well. Just a moment. So I believe the wave 4 triangle would look something like this. Okay, we've got a wave 1 high, wave 2 low. And instead of this being a smaller degree wave 1, maybe this is wave 3. And if that is wave 3, then that means we're going through a wave 4. Now, a couple of things that we can look at when we consider this wave 4, is that wave 4, its cousin wave, is going to be wave 2 down here. So this is, so this is wave 2. Okay, wave 4 is going to be its cousin wave. So there should be, when you look at cousin waves, there should be a relationship between them, meaning they should look somewhat, think about your cousins. You don't look exactly the same, but you look like you're part of the same family. And that's what we're looking at here on this wave 4, is that it should look like it's a part of the same family. It should have a similar size and time, or at least a, somewhat of a relatable size and time, and somewhat of a relatable size and depth. And so when you just look here on the chart and you look at how deep this is, so far it looks like to have similar depth. And this wave 2 here went from the summer of 2019 to 2020. So this one lasts about 9 months. And so this one would likely last more than 9 months. So this would carry into first or second quarter of 2022, the new calendar year. So if we fail to get any type of extension higher on Ethereum, and it just seems to want to grind sideways, this could be that explanation for it. Now, within the next move within Ethereum would call for a move back down here, probably into the low 2000s. So again, you're looking at maybe 2000, 2100, 2200, somewhere around there. That would simply be wave C. then a rally in wave D that would be another fake out to the upside, and then another softening back down here in wave E. So this, like I said, would carry well into calendar year 2022, and it would call for much deeper cuts. The good news is that under this type of a scenario, if we do get a move down into the low 2000s for Ethereum, it's going to be a heck of a buying opportunity. And I would think that a lot of folks would be loading it up if Ethereum were to drop down to those levels. So that's all the time that we've got here for today. If you like what you're seeing here, go ahead, subscribe, give us a thumbs up. Feel free to leave any comments below as well. Also, I'm going to leave a link down into the comments below, or into the notes section below. From time to time, we will do some live webinars, and you'll find those simply by traversing to the site. Once you are enrolled in our mailing list, then I'll email you when we do have live webinars coming up, or you can just go out and check my site down in the link below as well. I want to wish you all the best of luck in your trading. We will talk to you soon. Take care. Bye now.